Welcome. If you're watching this, there's a chance you've just been through something really hard. Whether it's a natural or human-caused disaster, something that has turned your business upside down. When a disaster hits, cash flow can stop almost immediately, and the bills don't. Payroll, rent, loan payments, vendor invoices, they keep coming even when your doors are closed. So in this video, we're going to walk you through managing your insurance claim, if you have insurance. Whether you have insurance or not, we also want to make sure you're aware of the funding options available to you, how to position yourself to access them as quickly as possible, and a few tips for getting creative when the traditional options take time. Let's get into it. If you have business insurance, your claim is likely your single most important financial recovery tool, and how you manage it matters enormously. The difference between a fair settlement and leaving thousands of dollars on the table often comes down to preparation and knowing what to expect. Before the adjuster arrives, pull together your full documentation package, your photos and video, your loss log, your financial records, your prior year tax returns, and anything else that was submitted. Write down your claim number, your adjuster's name and direct contact information, and your expected inspection timeline. It's a good idea to start a conversation log now so that you can document the date, time, name, and what was discussed in every call, email, and in-person conversation you have with your insurance company. Now, something really important to note when it comes to insurance. Do not sign anything or accept any preliminary offer until you fully understand the scope of your damage. Early offers are sometimes made before a complete assessment. And once you sign, it can be very difficult to go back. During the inspection, be present. Walk every damaged area with the adjuster and point out damage that isn't immediately obvious. Cold storage coils, interior walls, subfloors. Don't assume they'll find everything on their own. If you're in grocery or convenience, walk the adjuster through every refrigeration unit and freezer section individually. If you're a flower shop owner, explain the perishability timeline to your adjuster. Floral stock can be significantly undervalued if the adjuster doesn't understand how quickly it becomes a total loss. Pet store owners, make sure any live animal welfare costs you incurred are part of the conversation. The key throughout the inspection is this: let your documented evidence do the talking. Don't minimize damage and don't speculate about causes. After the inspection, request a full written copy of the adjuster's report. Review your policy's proof of loss requirements and deadlines carefully. Missing a deadline can jeopardize your claim. And if the settlement offer feels low, you have options. A public adjuster, who typically works on a contingency basis of 5 to 15% of the claim, can advocate on your behalf. You also have the right to invoke your policy's dispute and appraisal clause to challenge offers you believe are unfair. One more thing to understand. Know whether your policy pays actual cash value or replacement cost value. Actual cash value accounts for depreciation. So a refrigerator you bought 5 years ago is worth less than what it costs to replace it today. Replacement cost value pays what it actually costs to replace the item. That distinction can mean a significant difference in your settlement. A note on business interruption insurance. If you have it, it's designed to cover your lost net income and continuing operating expenses, things like payroll, rent, and utilities, during the period you're unable to operate. Most BI policies have a waiting period, commonly 72 hours, before coverage kicks in. Your sales history and POS reports are your primary evidence for a BI claim, and every receipt from your closure period counts. No expense is too small to document. If you have extra expense coverage, it pays for above normal costs to keep partial operations going. So if you can pivot in any way during recovery, use it and track every dollar. What if you don't have insurance? First, you still have options. FEMA may be able to provide funds to help fix or replace essential property. SBA disaster loans and grants may be available. Crowdfunding can help. And one practical tip: make a prioritized list of the most essential things you need to buy or pay for to resume operations, with specific dollar amounts. Having that list ready makes every funding conversation, whether it's with a lender, a grant organization, or your community, much more focused and compelling. Let's get into some of the post-disaster funding options. The single most important federal financial recovery tool available to small businesses is the SBA Disaster Loan Program. These loans are typically made available after a presidential or SBA administrative disaster declaration for your area. There are two main loan types to know about. The business physical disaster loan covers repair or replacement of physical property, your building, equipment, fixtures, and inventory. The economic injury disaster loan, or EIDL, is for working capital. If the disaster has caused a significant revenue drop and you need help covering operating expenses while you recover, this is the one to look at. Visit sba.gov for current information on rates, requirements, the application process, and free assistance in applying. Apply as early as possible. Disaster recovery loans have strict deadlines, and the earlier you're in the queue, the better. Know that applying for an SBA loan does not disqualify you from other assistance. You can pursue multiple options simultaneously. For most disaster recovery loan applications, you can expect to provide some standard documentation such as your last 3 years of business and personal tax returns for owners with 20% or more ownership, 12 months of business bank statements, a schedule of current business debts, a personal financial statement, monthly sales figures, your lease or deed, insurance documentation, photo evidence of damage, and inventory loss records. Start gathering these as soon as possible. If records were lost or damaged in the disaster, don't panic. You can call the IRS for free tax transcripts going back 3 years. Your bank likely has 7 years of statements. Download everything you can from your point of sale, accounting software, delivery platforms, and payment processors. Vendors can often provide purchase history on request. Grants are worth pursuing in parallel with loans, and some move much faster than federal programs. On the federal and state side, look into the FEMA Hazard Mitigation Grant Program and the Economic Development Administration Disaster Recovery Funding. Check your state's Economic Development Office for state-specific small business recovery grants. Locally, community foundations and nonprofits often activate emergency funds within days of a disaster. Industry associations such as restaurant groups, grocer associations, florist associations frequently have member relief funds with faster disbursement than federal programs. And keep an eye on corporate programs from companies like Lisk and Hello Alice, which periodically offer disaster recovery grants. A current online search for small business disaster recovery grants and loans in your area and industry will often surface options you wouldn't find otherwise. Using donation-based crowdfunding platforms like GoFundMe can be a meaningful source of supplemental funding, especially if your business has a strong community following. Your customers and supporters want to help. They just need to know how. A few tips that make a real difference when setting up your crowdfunding campaign. Tell your story personally and explain what your business means to the neighborhood. Use real photos and video of the damage. Be specific. Help us replace our walk-in cooler is more compelling than a general ask. Start with your inner circle to build early momentum before going public. Keep supporters updated with progress photos and milestones. And always include a direct link to your campaign in every communication. As you move through recovery, consider the things that will protect you better next time. For example, switching to cloud-based file storage and accounting software will ensure automatic backup of your records off-site. Work toward building a dedicated disaster reserve fund. Even 1 month of fixed expenses can bridge the early days of a future recovery. Lastly, talk to your accountant about how your disaster losses affect your tax liability this year. There are often deductions and relief provisions that can meaningfully reduce your burden. Recovering financially from a disaster is a marathon. There will be paperwork, waiting, and moments where the process feels like it's working against you. But every document you gather, every application you submit, every conversation you log, it all adds up. It all moves you forward. For more details, including an insurance claim preparation checklists, check out Section 4 of the Disaster Preparedness and Recovery Toolkit linked below.